All right. And I'll tell you, oh, I can see your screen already.
Perfect.
All right. I'll get out of the way. It's your turn. Go.
Thank you. Good to be here, everyone. It is 5:04 Eastern Time in New York City, where I live. And let me tell you, this is going to be a big week to trade. Why? There's a Fed meeting on Wednesday. And if you're not aware of it, this is going to be a very contentious meeting, I think, for the Fed because everyone is expecting the Fed to drop rates dramatically on Wednesday. I don't know if that's going to happen, to be honest with you. I think it's probably going to be a quarter of a point. But either way, it's going to create opportunity. Could be to the upside, could be to the downside. We're going to talk today about what I do specifically, which is I'm looking for institutional money and I'm looking to see what institutional money is doing. And I'm looking to see it in the gap. And then we're going to talk about what is a gap as well. I also appear on TV and I talk about stocks. I talk about the economy. I talk about the stock market, which is very exciting, and I love to do it. And it's convenient because I live in New York. If you have questions after tonight, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. And again, you can follow me. Probably the best place to follow me is YouTube because I have a lot of videos on there as well. Excuse me. Now, as we're going along today, you can feel free to write questions in the room. I will see them in live time. And today is, oh gosh, today's September 15th. We're halfway through September already. That is crazy. Can you believe it? So we only have 3.5 more months left to the end of the year. It's a very busy time to trade in the fall. Again, now is the time when you want to trade, you want to hit the ground running, you want to make money before the holidays. It's earnings season in a few weeks, and then the Fed this week, and it's going to be a busy time where we have a lot of volume. And again, when you have volume, when you have momentum, that creates opportunity as long as you get the direction right in your trade, okay? So for me, when I started out trading, I was doing mortgages for 17 years and I wanted a new career. And then I got involved in it, and I thought I'd figure out how to trade and make money in the market really quick in like 6 months. It didn't work out that way. It took me 3 years to develop the program that I do. And, you know, when I started doing it, it was that I wanted to change careers. But as the years have gone on and I've gotten better as a trader, again, experience counts, I've realized that financial freedom really means peace of mind. You know, I mean, if we rewind 5 years ago, it was COVID, you know, and now we're in an environment where I still think we have very high inflation. So when you work for yourself and you are good at what you do, you feel more empowered, okay? You don't feel like someone else controls your life. And when you have money in the bank and you have savings, then you're less stressed. And I'm sorry, but that's just a fact, okay? Now, I put the stats in here year to date for my trading room. I run a live trading room. I'm mostly short, which we're going to talk about here, which seems ironic considering how bullish the market has been. But I risk an average of $4,000 a trade. These are margin trades, okay? Pretty good week last week, right up until, again, halfway through September. It's hard to believe. But up 902,896. Again, this is through last week. Been looking forward to getting into it, getting really pumped, you know, for the fall trading earnings season, which is really the busy time, which will start at the beginning of October. But I think this week is going to be a gateway into that. Do you know what I mean? Like, if this week could be a big week. I don't know what the direction is going to be, though. But again, today is only Monday. So far year to date in the room, we have a 62% win ratio. Again, $4,000 is my average risk on those trades, and they were margin trades. I also do options. I'm just risk more of my options. So my option stats are, again, my profits are more because I'm risking an average of about 8,000. My stats are win ratio of 65% for options. You can risk less. You could do one contract. I get this question a lot. If you want to risk, say, $500 a trade, then you have to stay within those parameters. So if something costs $5, you do one. If it costs $3, you could do two. Okay, that would be $600. That's okay. So you must choose your risk, and it should be consistent per trade, the dollar and cents amount, okay? So year to date, so far, again, this is using my Golden Gap system, the same system, but doing options and day trades, almost 4 million. Again, we have 3.5 months ready to go, and I like to take time off over the holidays, so I'm ramping it up. I'm going to be working my butt off, focusing on trading September, October, November. Again, the time to relax is the end of the year and get ready for next year. Now is the time to work and trade. So how can you make your dream of becoming a successful trader come true? You have to be focused. You have to take it seriously. I found, and again, I've had the stock swoosh now for 14 years, that a lot of people don't take it seriously enough. They just think they can just, buy every dip. Now, again, the market's been very bullish this year since we had the sell-off. So I'm talking about after the Liberation Day, beginning of April, the market's been bullish. If you bought every dip in the market, you'd be up. That's not going to last. Does it end this week? It might. It could. But nothing goes straight up and nothing goes straight down. And it's very interesting because a lot of people have been making money going long and missing out on opportunities to short. And then when we sell off, or if we sell off again, they're going to miss out on those opportunities too, because they've been going long now for the last 6 months thinking it was going to last forever. Here was a trade we did actually last week on the 10th, which is kind of funny here, that we shorted Apple because it's a very strong stock, but we did. So we did Apple, 9:10. Here was the day. So what do? I get up in the morning and I'm looking for stocks that are gapping. Now, if you don't know what a gap is, I'm going to explain it to you. A stock gaps when the closing price one day is different from the opening price the next day. Okay, so I'm going back here to the 9th and the 10th. So Apple closed here at 4 o'clock and opened lower at 9:30 the next day. So we shorted it. This was the 10th. We did a day trade. Again, this is a margin trade. We shorted it at 230.50, exited at 228.80. This kept going. This kept going. This came all the way down to 226 and change. So I got out of this as a day trade, and it was an early morning trade quick, but I could have made more. We did a put in this too. We did the 230 puts too, all right? But anyways, a gap is due to the close and the open, and then I'm trying to determine what this gap is going to do. Is it going to fill the space up? Is it going to fill the gap? Is it going to fall and continue in the direction of the gap? I always play the gap in the direction of the gap, just so you know. So again, if I rate it using my checklist system and I determine that it rates well, I'm going to go after it in the direction it's going, which in this case here was a short. If I rate it and it doesn't get a good rating, fails in the rating system, and I say, oh, this could go up, I'm not going to go long it, because I never, ever, ever go against the direction of the gap, even if I see that it's going to lift. You know what I mean? One of the ones that we didn't do was Microsoft on earnings that failed. Sold off like a hot cake. And again, any questions, let me know here as we're going along. So here was Apple. Again, this was the day that we did it. It was just a couple of days ago. We shorted it, got in, got out, got the drop. Again, I wanted to show you in here how it came down to 226. I was way out of it because I got out of it up in here quickly in the morning. I like to trade fast in the morning, half an hour, maybe 15 minutes. I could be in and out of trade in 5 minutes. But I'm looking at the morning period here to get the moves for the day trades. Options I will hold, but day trades I'm out of fast. So the one thing, again, for me is I'm very, very consistent with my results, year over year over year, week over week over month, because I'm doing the same thing. I'm mostly shorting, number one, and number two, I'm only trading gaps. And I'm looking for the fast trades, the quick trades. Now, why do I mostly short? You say, well, wait a minute, the market's been bullish. Why aren't you going long? Some trades we've done long. I've gone long some things, but I'm mostly shorting because I find that shorting gives me a niche. Stocks sell off way, way faster than they ever rally. I'm also very good at shorting, okay? So this allows me the opportunity then to also see when something's really strong, if I do want to go long, okay? But the consistency counts. It matters. And I think a lot of people are too all over the place with their trading, doing too many different things, or even taking the same stock in 2 different directions the same day. I never, ever do that. Okay, I never, ever do that. And it's very problematic to do that because then if you're doing that, you really have conviction in nothing. Does that make sense? Any questions here so far? How's everyone doing? Okay, I'm going to keep going. Like I was saying, again, consistency helps you stay in this business. Then you don't blow up your account, have to refund it, And you also never get good if you're doing too many different things. And again, excelling in something, getting really good in it with training with a specific system or strategy helps, just like if you were doing a sport or if you had a certain career path. You know what I mean? Like if you're an accountant, if you're at a CPA license, if you've been doing accounting, for 15, 20 years, you know a lot about tax law, okay? Taxes. If you're jumping up and down doing a million things like people do, always trying to catch the next get rich quick thing, you're never going to really get good. And so for me, it was always about trying to find the best trade a day and honing in one thing and then adding size to it and then adding the size. So one of the biggest trades in the last month that I did, again, was PLTR, which I'm going to go over here. But how did I know to do it? Because I rated the gap. So this was PLTR. We shorted it, okay? It was a put. We got in it, and I called it on 8/14 right here. And again, here is the gap. Stock closed here, gap down, open, rallied, dropped. Closed here, fell off a cliff. So we did the 180 puts, which we took here, was above the strike. When we did it, we bought the put and I sold it to exit it, okay? So again, this is a sell-off. This is panic. Panic comes into a stock big and quick, and here was the newsletter. So if you decide to come and join my group, this gets emailed to you. The newsletters get emailed to you. This was 11:38 on the 14th, and we did this trade. This was really actually relatively cheap. $3.25 for one contract, sold it at 35. Return on investment was 977%. Profit was $95,250 on a risk of $97.50. Now that's a big risk, but it was a huge trade. What you could have done is you could have done two. You could have gotten the drop, got out of one, held the other one. Now, if your risk is smaller, I call it a beginner risk. It's a little bit more really, because I have 1,300 here. You could risk on average 1,000, or like I said, you could do one. 4 contracts sold at 35. You could have made $12,700. Again, this is taking it, getting the sell-off, letting the panic come in, get out. Again, this was accurately predicting that PLTR, I'm going to go back to the chart here, would in fact continue in the direction of the gap. And that's what happened. Okay, that's what happened. So again, this could have flipped. For those of you that don't know this stock and haven't been following it, most people have been following this. This has been one of the popular stocks to trade in 2025. It's been strong, okay? It's been in an uptrend, but that was one of the biggest shorts we had in the last month. So again, whether you want to trade full-time or part-time, the idea is that you want to get the accuracy. You want to have the consistency. The idea is you want to make money. It doesn't mean that every trade that you take is going to work. Every trade you take is not going to work. And if anyone tells you that, don't believe them. So I've been trading now for 17 years. I have trades that lose. That's why I showed you the stats, okay? Bottom line is you have to have more winners than losers. That's how you get somewhere. And then on top of that, you have some big winners. So when you have more winners than losers, and then sometimes you have the big winners like the PLTR, it not only covers the trades that lose, it gets you ahead, okay? And again, we would all be risking our whole accounts every day if we, never lost. That's not realistic. Even people that, I live in New York, I live in Manhattan, I live in one of the wealthiest neighborhoods in the country. There are people that trade, that run hedge funds. They take losses. I mean, it's just like, the only difference is when someone has a lot of money and they take a hit, it doesn't seem as, emotional for people that have a small amount. But I will tell you that there are people that sometimes run hedge funds, okay, or take even positions, they're professional traders or they're trading large size, that take hits that emotionally affect them as well, even if they didn't blow up their account, because they might have taken too much risk. Do you know what I'm saying? You've seen that with certain market moves and stock moves. Again, the tariff situation that's been going on all year. You've seen a lot of people that were just shocked by that when we had that big sell-off, that was February into March. So again, there's lots and lots of things that are going on all the time. We can't always predict everything that's going to happen. You might sometimes get stuck in a trade that something happens that's unpredictable, okay? Again, it doesn't mean you give up, but if you're sizing yourself correctly and equally, then it's one loss and you get up the next day and you proceed, okay? So you need the right tools to be successful. You need the right tools to get the good results. And for me, my tool is what? My rating system. I was talking about this. This is what I do. I get up in the morning and I look at the gap and I rate it on the daily chart. I have a 26-point rating system that helps me determine the direction that the stock is going to go. Is it going to keep going up? Is it going to keep going down? And then I know the direction to take it. Sometimes I do a day trade and an option in it. Sometimes I do one or the other, okay? But again, sometimes I do both. So if you only like to do options, you could do it as an option. If you only like to do day trades, you could do it as a day trade. So we did a bunch of trades in this PLTR. This trade was a nice trade too. It wasn't as big as the 180s because we were in that very, very early and it fell, you know, all the way down, broke 150, but we did do the 160s too. So here on this particular day, this gapped again. Stock closed here, gapped down. We did the 160s and it fell off a cliff. Right in there for 2 days. That was a quick one. So we did it on the 19th, 1047. You would have gotten the email. Again, this was a 279% return on investment. It went quick and fast. And again, just because something expires on a Friday, even if you have 7 days left or 8 days left, it doesn't mean I'm holding it. Again, I'm a momentum trader. So when I say I'm trading on the side of institutional money, I mean the money side that's making the big moves, the momentum moves. When I started talking today, I said I think this is going to be a big week. Why? Institutional money is going to take action this week. I guarantee you that's going to happen between Wednesday, Thursday, and Friday. But what actions they will take, I don't know, because I don't know what the Fed's going to say. And even if I did know what the Fed was going to say, I don't know what the reaction of the big money is going to be until I see it anyways in the gap, which would be when? Wednesday night, Thursday morning, Thursday night, Friday morning, okay? So again, the market's been up. We've had a big rally. People are long. Institutional money may dump it, may take profits here into this meeting. Results, you know, whatever Jerome Powell says. Or they may continue buying the market. So again, it's exciting to trade when you know you have the side of the big money with you, because it's very, very easy to make money. And because you're not pushing it. And then whether you have one contract or 100 shares, a small size or big size, it's easy to make money. You don't have to take big size, actually. If you've got the institutional money moving the stock, 10, 20 points. Here is a beginner risk, a smaller risk. Again, if you took 3 contracts and sold at 18, this is, again, the 160 PLTR trade, okay? So anyways, I use a checklist. This helps me determine the direction the stock will go in the gap based on a daily chart, which is using what? Technical analysis. So again, what is technical analysis? It's looking at past price data to predict future price data. And that's what I do. So again, you can look at something and say, okay, well, this is here. Where's it going to go next? Okay, now you say, well, what causes a gap? News can cause a gap. Fed meeting, we're going to have that Wednesday, could cause a gap. Market move could cause a gap. Sector related could cause a gap. Earnings reports could cause a gap. Terrible accidents. Sometimes you have plane crashes. Then you have some of the airline stocks. So it could be all kinds of things. CEO quits. So you have a lot of things that can create, or you could say reasons for the gap. Okay. But I do prefer to short. I prefer to short. And I consider myself lucky that I know how to short, because the fact that many retail traders don't know how to short or don't like to short. And then when stocks fall, they don't know what to do. They don't know what to do. They kind of freeze like a deer in headlights. So again, I will go long. Sometimes when I go long, it's for a day or two, or maybe in a day trade, or maybe I'll go long the market sometime. Not right now. I'm not long the market here. We went long CVX, which is oil, and that worked. But I don't go long most days. I'm mostly short. I feel like it gives me an edge, and I feel like, again, I get the biggest moves to the downside. So I'm not saying the panic buying doesn't exist. It does, but it's very, very, very rare. And so more than not, you get panic selling, okay? And so, again, it's something that is fun to trade because you can get the big moves. So how do I determine what the smart money is doing? I use my tools. It's my rating system. It is based on technical analysis in my gaps. I get up in the morning and I do the work. I never skip it. So I started trading in 2008. I developed my system over the course of 3 years. I don't skip around. I don't guess. It's a 50-50 crapshoot kind of thing. No, that's not how I think. That's not how I trade. When I take a trade, I believe it's going to work and I size myself accordingly. But I do the work in the morning. I get up early. You got to give yourself at least an hour to prepare and get ready to trade. I go through my process. I go through my checklist. I make a small watch list and I try to narrow it down to 1 or 2 things. And again, you know, if I have 10 things, then I'm still trying to narrow it down to do the best thing, because it's very difficult to do more than 1 day trade at a time. I'm not saying I never do. Sometimes I'll do 2 things at a time, but it's a lot easier to do 1 trade at a time. Now here was another one here. We did Walmart. Again, I'm looking for accuracy. Accuracy what? In the pick. In the pick, I'm looking to make the best pick that's going to have a big move and get the direction right. Walmart up here. Again, this was back in the middle of August. Not quite a month ago. Stock closed up here, gapped down. Again, this is a gap. So close up here around 103 and change, or 102 and change, almost hit 103, gap down here to 99 something, open, dropped, boom, boom, boom. So again, this sold off. I actually got out of this early. You could have done a day trade here, could have done a day trade here, could have done a put, could have held it all the way down. So I did do puts in this and day trades, but I actually got out of that a little early. 822 we did this. I shorted at 98.45. Again, this is a day trade. You need a margin account. Got out at 97.38. That's a good trade. Give me $1. Boom, out. Again, chunk it, chunk it, chunk it out. How am I getting these results that I showed you earlier? I take it, get the move, get out. Take it, get the move, get out. I'm not buying and holding forever. Just like I'm not shorting and holding forever. Okay, it's called putting together a week. I'm an active trader. I'm a momentum trader. All right, I'm not a swing trader. We're not buying and holding stocks forever. Okay. So again, this was a nice trade here on this day. This was the 22nd. We shorted it. Profit was 32.10. Again, you could have done 1,000 shares. Could have made a little over $1,000. Again, $1,000 a day is $5,000 a week. What's wrong with that? Nothing. Nothing. I mean, to be able to do these trades in several minutes and just, you know, I don't trade all day. So the room's up in the morning for half an hour. I'm not sitting at my desk from 9:30 till 4. I'm doing other things. And again, that's the one nice thing about being a professional trader too. So I find gaps and rate them using a checklist. Gaps have to be qualified. The checklist tells you what to look for in the price of the stock and where to take it and when. Again, it's about being professional, thinking of this as a business, taking it seriously, which I found that a lot of people just don't take trading seriously enough. I mean, they say that they do, but they really don't. They really don't. They don't think long and hard enough about the stock picks that they're going to take. They don't think long and hard enough about their targets, about their entries, about which direction they want to take something. And if you want to get good results, you have to think about it. You know what I mean? And so that's important, okay? So I trade on the side of institutional money for the momentum moves. Big money is where it's at, and that means big momentum. So here was the day trade then that we did, or this was a day trade. I'm sorry, this wasn't that one particular day. This was 825. Stock close here, gap down, open, dropped. We shorted PLTR here on 825. Entry was 154.90. Exit was 153.50. Profit was $3,500. We got in, got out, and you said, well, this is a tail. It closed green. There was a short here. There was a short here. We did a day trade. Again, I'm looking for $1 or more. In, out, done, boom. Call it a day. Again, this was a margin trade. Okay, so you have to have a margin account to do margin trades where you're shorting it, whether it's 500 shares, 1,000 shares. Okay. Any questions here so far? How's everyone doing? I don't know if the questions are on, Jeff. Are they on?
Yes, they are.
Okay. Very good. All right, I'm going to keep going. So I was talking about the Fed. Okay, I was talking about the meeting that is coming up on Wednesday. Okay. If you're trying to trade the news or predict the outcome after the news or trying to look at fundamentals, or if you're like trying to predict what the Fed's going to do, don't. Again, you don't have a crystal ball. You don't know. But when you see the price action, okay, That's fact, okay? You see it. You say, oh, the stock is trading at, 182.50. That's not up for debate, okay? And that's why technical analysis is so powerful. And again, what is technical analysis? It's looking at current price data and then trying to predict future price data by looking at current and past price data. That we can see and we know, and it's real, and it's in the candlesticks, okay? Predicting what the Fed's going to do, what bond prices are going to be, 3 months from now, 6 months from now, these are impossibilities, okay? But actual data, live data on the daily chart, current time, the market's closed right now, it's 5:30, but during the day, we see it, we see the open tomorrow morning, we can see that is factual data, and we can use that to help us make decisions about taking trades, okay? So again, my tool is a rating system. You have to go through, you have to use your brain, you have to go through the points on the daily chart. I use this tool each morning to determine what stock to trade and when. It's a very useful tool in any market, but particularly in this type of market. It is also can help you decide if you should exit a long. Say you're in a long, and the stock acts down against you. It could sell off and say you're up, or say you're upside down. You want to get out because it could keep falling more. You could lose, okay? You could lose more, or you could lose your profits. So it's a very useful tool, and it takes the guesswork out of your trading. But, I found when I started trading, it was very, very important to get good at one thing. And the longer that I trade, the more experience I have under my belt, I realized that too. In order to become successful in the market, you have to become an expert, a specialist in one specific strategy. I choose a strategy that reads institutional money, or what I call power money in the market. Again, what is power money? Large professional traders taking large size, hedge funds, big banks have trading desks too. They take size. It's a type of size that moves the stock, okay? This brings momentum and opportunity, and you want to trade with the side of power. Reading this is a skill. The skill can be acquired with education, okay? And, when I started trading, I took one class, and I didn't learn how to make money in that class, but I did learn the basics of technical analysis, and I realized that was important. And then I developed my own system. But, if you're not following someone that knows what to do, and you don't have a good system, it's going to be hard for you to make money. Unless you're in a trending market. Like now, the market's trending up, so people are just going long and making money and thinking they know what to do. But it's not going to last. It could end this week. It could end in a month from now. It could end February 2nd. I don't know. But the point is nothing goes straight up or down. And then when people don't know what to do, after they thought they would know what to do, is when people tend to lose. And they tend to risk the farm and risk too much money and go all in and double down and then lose all the profits that they made for the last 6 months if they've been going long, and lose it very quickly, okay? So in any market conditions, bullish or bearish, you need to know how to trade, and you need to have a set system that works under any market conditions. I can't stress that enough. I just can't stress that enough, and I don't think people understand that, Some people have been trading a long time that I teach. Some people are trading longer than I'm alive. Some people have never traded at all that I teach. But trading education is very important. Far too often, traders don't understand exactly how important it is. People feel like they don't need education when the times are easy. You just go long anything, the market's going up, making new highs every day or every week. It's important under any times. But in the easy times, people don't realize how important it is. But it really is important actually all the time. But in the hard times, it's the make or break you. Do you know what I'm saying? Because you don't want to lose your capital. You don't want to lose your initial stake. So let's say you open up an account, you have 25 grand in it. You don't want to lose that. Do you know what I'm saying? So if you build that 25 to 50, you don't want to blow it all. And again, this is why knowing both directions, how to go long and how to short, is extremely important too. But it is okay to ask for help and admit you do not know. It's also okay to admit that what you're doing is not working. If you're trading and losing and you're like, I have no idea, I don't understand this. Just admit it. It doesn't mean you're dumb or stupid or there's anything wrong with you. It just means you don't have a system. That's it. Or you're not using the right system, or you're not following the right mentor. The sooner you come to terms with reality, if you're losing money, that you don't know what you're doing and that you need help, the faster you can turn it around. And you can turn it around very, very quickly. So how can you become successful trading? It's not really by risking a lot. Anybody can risk a lot. Again, you can throw your whole account in something. If it's a bad trade, you're going to lose the money though. That's just risk for risk's sake. I developed a system not to take risk for risk's sake, but because I felt like the risk was worth putting my money on the line. When I started trading, I was working my mortgage job full time. I didn't want to lose my money. And even when I figured out what I was doing, I still didn't really want to lose my money. So I was like, okay, if I'm going to risk money in this trade, then it better darn well be good. Now, it didn't mean that every trade loses. It didn't mean that every trade wins. It meant that I had more winners than losers. And it meant that I felt it was worth taking the risk. It was worth taking the risk. Like, if I don't take this, I'm crazy not to take it kind of thing. Do you know what I'm saying? And I felt like if I get 20 points of 26 points, like, I'm crazy not to take it in my mind. I still feel like that now. Okay? And that's what makes me do the trade. Do you follow what I'm saying? But it's about the consistency and then having the focus. And then, of course, being practical and professional, which, again, is not that hard. It's not that hard to do. It's just that I think a lot of people are all over the place and they need a focus and they need to just calm down, you know. If you have an account and you want to grow it, it's not by doubling down and becoming a pig or over trading. It's getting good at one thing, it's taking time, and like I said, it's chunk it, chunk it, chunk it, chunk it out. So you need a winning strategy. For me, mine is called golden gaps. So what is a gap? A stock gap from the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple. So there's gaps every day, because guess what? It's very rare that something would close at 32.02 and open at 32.02. Yes, it can happen. That would be called a neutral gap, but it's rare. All right. Now, what is a gap? Let's take a look at AMD. This was just last week, 2 weeks ago, whatever. Stock closed here, gap down, open, dropped. Okay, this was a Friday. So AMD closed at one price here at 4 o'clock, gap down the next day at Monday, and open, or Friday, I'm sorry, and open at a different price, lower. And I said, you know what, this looks like it's going to fall, and then it did. So again, this is a short. You would have wanted to be short. You could have done a day trade. You could have done a put. Here's another example of a gap. Dell, again, stock closed here, gap down. Stock closed up here in the 130s, gap down here under 125. Again, you could have shorted it, could have done a day trade, could have bought a put, could have done both. Fell, boom. Had another gap here actually last week too. There's another one. This closed here, gap down, open, dropped. So again, a gap is a difference between the close and the open. I'm just focusing on bearish gaps, but I will go long, but I prefer to short, the reasons I explained earlier, but it's determining who's in control. So who's in control of the market right now? The bulls. Market made new highs today. So again, if you determine the control, again, this isn't about the trend. I'm talking about the live day. You want to take a trade right now, make money today. Because if you said to me, well, the bulls are going to be in control, you know, for the next 2-3 months, you don't know that. Nobody knows that. And that is my point. That's my point, why you have to learn how to short and go long. And on top of that, it's actually not that hard to make money shorting, even in a bullish market. It's actually a lot harder to make money going long in a bearish market if we turn. And again, I'm not going to go off on a tangent about that. That's a whole discussion for maybe another webinar. But again, one of the reasons why I found that shorting is so successful is because you can short a lot in a bullish market or a bearish market. Do you know what I'm saying? And again, short moves happen quick, fast. So here's the WMT. Here we go. Stock closed here, gap down, boom. My point about getting the right pick in the direction right is that you have to get the direction right to win. If you get the direction wrong too often, you'll lose. And again, you got to get your sizing right too. But I developed a system. It's a 26-point system that I turned and coined the term the golden gap. A golden gap is a gap that rates 20 points or more per the golden gap 26-point rating system. You take the trade in the direction of the gap. You do the trade as a day trader option. I do both. I'm figuring out on the daily chart, and I'm taking the trade in the 1-minute chart. So how do I know ahead of time where stock will go? I rate the gap. I use a 26-point checklist. This checklist tells you what to trade and what to look for each day. Again, I'm doing active day trades, but I sat down this year And I made a list of stocks that I want to do in my retirement account. And then I made a list of targets. I'm very good at figuring out targets too. And again, I'm young, okay? I'm watching for my entries in those stocks that I want to get in, none of which I've taken yet, to be honest with you. So the thing is that, again, you can use this system for long term, which I am going to do for my retirement account for myself. I have a self-directed account. But that's not something you're actively doing on a daily basis. On a daily basis, day over day, week over week, if you decide you want to trade, the point is to make money where it's income generation. The point of long-term swing trades or a retirement account, again, is just what it is. Your retirement account. It's long-term investments. Where, like, so again, I wrote some targets down, which I'm not going to get into. This is a whole nother discussion. Some of them are probably crazy targets. You can probably laugh at me and say, there's no way in hell that's going to get to that number or whatever. And these are actually all long positions, because I'm just going to buy the stocks that I like. They're crazy targets, but I've been trading so long now that I have a feel for how things move with institutional money, that I can tell these stocks over my life are going to get to these numbers. Now, how fast or when, I don't know, and I don't care, because again, I'm young. When I get in the position, I'm just going to let them ride out. But the point is, it's very useful to understand, no matter what you're doing. If you're working full time, if you don't want to do this as a job, if you just want to do this on the side, it's very useful to understand technical analysis for even something like your retirement account. Because many of these money manager people, and again, I appear with them all on TV. They don't know how to read a chart to save their life. They may as well be blind reading the chart. They don't know how to do it, okay? You could better manage your own accounts, okay, even if you don't have a self-directed account. But you could even manage your own, because you can go and say, I want to be in this thing, I want to be in this thing, I want to be in this thing when you're in a fund. And you can better look at your long-term positions too. But again, retirement money, long-term savings money, it's not something that you're generating income for right now. That's for when you're not working at all. When you've retired, money that you want to live on. And anything that people think that they can live on now, just add a couple zeros to it, fast forward 10, 15, 20, 25, 30 years from now. Because look at the cost of inflation, what things cost. Again, we probably have a lot of different age groups here. But, I mean, the cost of things now, look at how much it's changed in 5 years. Go back 10 years. Go back 30. So, I mean, again, there's just no downside to understanding how to trade, actively trade, read a chart, technical analysis, long-term investments, all of it, okay? Like, the more knowledge you have, the better off you're going to be for yourself. So again, how do I determine who is in control? I rate the gap. This gives me a daily focus. So again, this seems really funny now that we did Q puts and made money, but we did. So on 8/18, I shorted the market. I did the QQQs 570s. We had a nice sell-off here. This was an options trade. What day was that? That was the 18th. Oops. Here's the chart. So we did it here. So I bought puts here. Remember this? We sold off. Again, we did a put, and you could say it was kind of aggressive, but it worked. It was a big trade. So we did the 570s. Look where it went. Again, that was just a couple weeks ago. So they were cheap. $1.70. $1.70. Sold at 1040, 518%. Return on investment profit was $44,000. If you took 6 and was 1020, you could have made over $5,200. That was buying QQQ puts at 570. Again, I'm not short the market now, but I'm also not long it right now. But in that particular week, institutional money came in and sold the market. I don't even remember why. There's always a reason why. I don't even remember that was like a month ago. But again, I rated the gap. If you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction and get out after the move happens for profit. But you have to understand how to trade with this side of power, and you need to know how to find it. So knowing how to read what institutional money looks like is essential to becoming a successful trader. The benefit is that you can win big trading on this side of power. So I started out today saying a lot of people all over the place. That's the case. Too many people are all over the place. You have to have a system that gives you a focus. And for me, it's gaps, because they're really the most powerful show of price action in a chart. Gaps have large moves. The gaps can move up or down. Some of the biggest momentum moves in a daily chart come actually from a gap. And when I trade, I'm looking for and trading momentum. Then whether you have a small size or a large size, you will get a good risk to reward. So I do this with the checklist. I go through and rate the gap. Again, if it rates 20 points or more, I'm taking it in the direction of the gap. This helps me determine who's in control. Because again, if the bulls are in control, you've got to be long. If the bears are in control, you've got to be short. So it's like, again, it's a back and forth control between the bulls and the bears. And again, I'm talking about daily control. This has nothing to do with the trend, okay? But it does have to do with momentum and money, and a big flow of money going in a certain direction is what moves the market. Stocks, creates momentum, and sets the trend in charts. When you're looking for institutional money, you're really reading the side of power in a stock. You want to be in the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. Even if you think it's not, it is. It is, okay? So again, I look for gaps. I'm only trading them when they rate good. I'm chunking it out every single day in the room. And I really am in and out of my day trades very quickly, very fast. I'm looking to not sit at a computer all day. My options, I'll let them ride out. It's about working smarter, not harder, to get good. Any questions here so far? How are we doing? Just looking at the clock. I have a little bit more time here. Any questions, let me know. So gaps happen in the market on a regular basis. However, some gaps are better than others. Some gaps are nothing gaps, and some gaps are very powerful displays of institutional money. The most important gaps in the market are gaps that signify a change in direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. That is how you know when the power of money will flow to pay you. And like I said, shorting is a specialized thing to do, because most retail traders don't like to short, don't understand shorting, and won't short. They go long. And then when the downturn happens, whether it's in the market or a particular stock that they're trading or any selling at all, people get scared, they panic, they don't know what to do. They go long, the stock sells off further. And so again, like I said, you should know how to do both sides, but for me, I'm mostly short. And this just, when you think about it, you're like, oh, okay. I'm gotten good at one thing, and that's really all you need to make money. Like, all you really need is one good trade a day to make money too. So be consistent. It helps you in any market. And again, when you think about it, following the institutional money, following the big money, it does make sense. So I have a system. I developed a system. I've been doing it now for 17 years. It's hard to believe. It's a long time. The system tells you how, what, and when. How to make money in the market. Trade a strategy system that is profitable. Golden gaps are a highly profitable strategy because they focus on large momentum to trade. What stocks should you trade? Stocks that gap and rate 20 points or more per the Golden Gap 26-point rating system. Trade the gap in the direction of the gap. When do you trade them? Early in the morning in the open when they set up and trigger. And you must have a structure in place in order to make any money at all consistently. It is about the consistency that many traders lack in their systems. So I'm measuring gaps by rating them in the daily chart to find stocks to trade that have, number one, a high probability of directional bias for the entire day, preferably, like Walmart, like AMD, like the Apple last week. I want a big move, okay? Want a big move, early confirmation of the bias of the move between 9:30 and 10, gotta have it, or I'm not doing it. Like, I'm not doing trades in the middle of the day if I didn't see anything in the morning. And precise entries with follow through and a good risk to reward target potential, and that's what you'll learn in the class too. Someone has a question here. How can you check all 26 indicators in a very short time to decide which gap is good or bad? It doesn't take that long once you know how to do it. If you're brand new, it might take you 5 to 10 minutes. Like if you're new. Class is this weekend. Say you trade Monday morning, you just did the class, Saturday and Sunday. Monday morning you get up. An hour. Okay, 5-10 minutes if you really need to go slow. But again, I've been doing this a long time, but I still don't rush it. So you're not going to rate 10,000 things. You're not going to rate every gap in the world. You're going to automatically go through and say, no, no, maybe, 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 no, no, no. And then you make a list of the maybes. And then you might have like 6 or 7 things. You go through and you rate them. You follow what I'm saying. You're not rating every single thing in the world of gaps. So you put a plan of action in place. Trade only golden gaps are rated according to the 26-point system, so you have a high rate of success in directional bias. Get the best entry you can with precision early in the morning to get good risk to reward trades, and create a money management plan for yourself to achieve your goal of becoming a professional trader, and then working for yourself. And I say to people, take your time. You have all the time in the world. You don't want to lose your starting capital. You have all the time in the world to learn and do it. And you want to keep your mentality positive. You want to stay positive. If you've been training for a long time and you've been losing, you know, again, losing makes you feel like crap. But consequently, again, making money is great. But if you're high on the hog or high on the horse, and you're big in the head thinking that you're some great person now making money for the last 6 months just buying every dip in the market, that's just because the market rallied. It doesn't necessarily mean that you're doing anything, that you know what you're doing. So you have to stay steady. Don't get too big in the head, and don't feel like crap when you lose. You go steady by steady by steady, and you go use the same consistency with the risk, with your system, chunk it. That's where you're going to get where you want to be, where you're building your account, and then you're getting good, and you're learning as you go, and then fast forward 6 months, fast forward 12 months, fast forward 5 years, and you've got a lot of money in your account, and you're risking a good amount, you know, an advanced trader risk. I tell people, don't go too fast. Even if you have a big account now, go slow. The system I use to find the right gap each day is called the Golden Gap 26-point checklist. And you need conviction to make money, and you get that from understanding why. I get people want trade alerts and things like that, but you have no idea. You have no idea where the person called to trade at all. If I just had a trade alert service and you didn't understand what I was doing, you wouldn't have any clue why I called the trade, and you wouldn't understand it either, and you might kill it, and then it might go into work. So, I mean, again, understanding why actually is how I can do so well. And it doesn't mean that every trade works. Sometimes things don't work, and sometimes there is a reason why it didn't work. Sometimes there isn't. But if you know why I'm doing the trade and why I'm holding it out to its natural position or move, giving it time, like I do weekly options, it'll help you through the wiggles and jiggles, because the wiggles and jiggles is what kills people, okay? Truly, people can't hold on to a trade and give it a chance to work. And most of the time, that's because they don't understand, and they also have too much risk on. So your dreams are possible. Be realistic and grounded so you can attain them. I cannot stress enough how being grounded in what you're choosing to do will help you attain your goals. So empower yourself today. If you want to learn how to trade, I can teach you. Again, the Golden Gap course is a complete system to use to trade. I teach this class once a month. Again, I appear on TV during the week and trade during the week, during the weekends. Once a month, I teach the class. There's only a few more classes left this year. This is the class you'd want to get in on if you want to trade with us for earnings season. So the class is called the Golden Gap Course. It's a full course in how to strategically find, pick, and play stocks that are professional bearish gaps. It's September 20th and 21st, 9 a.m. to 5. Again, this is this weekend. Cost of the class is $69.99. Class is online. You can be anywhere in the world and take it. And I'm doing a welcome fall special. This picture I took with my phone. Can you believe I took that with my phone? It should be a postcard. This will be all fall colors in the next 30 days. It's gorgeous. But this is, I just took this picture over the weekend. But this is one of my favorite pictures in Central Park. I live along the park. So the welcome fall special is if you sign up for the Golden Gap course by 9/19, you will get the options newsletter subscription free to the end of next year. That's more than a year. That's all of this year, and then all of next year. It's a long time, and it's a lot of trades. And again, I showed you the year-to-date stats in there just for 2025, for the first 8.5 months. The newsletter, the trading room, and the market report subscription, all through the end of next year, so you can take your time, and you don't have to rush it, okay? Any last-minute questions here from anyone? I'm trying to think if there was anything else I was going to say.
Hey, Melissa, did you see the question about the 26 indicators?
I think that was the last one that I answered.
Okay, I just wanted to make sure.
Oh, you don't say what 26 points your presentation? No. The class, I teach that in the class, whoever asked that. The class is 14 hours. This is a 15-minute presentation. One, I charge money for that information. It's really good information. It's worth the cost of the class. And number two, it's 14 hours. 14 hours. Jeff's only letting me talk for 50 minutes. And I felt like I was talking really fast. Was there another question? Any other questions?
Those were the two that I saw.
Yeah. So anyways, think about what I said tonight. Again, a lot of good information, a lot of good takeaways from today. You got to watch this week, people. You have to watch Wednesday. If you're in the market, if you're in trades going into Wednesday, you're taking a risk not knowing what the outcome's going to be of the Fed meeting. Please be careful. Don't forget to chunk it, book money. And if you're interested, email me at melissa@thestockswoosh.com. Am I happy with 26 points? Yes. I mean, if I could come up with 126 points, I would, but I haven't added anything into my method for a while now. I think I've added things personally, which I can't necessarily like communicate in a point when I'm trading, which is just experience, which is why being in the live room really helps, where I'm seeing something and I'm saying, no, we're not doing that, or we're doing this one, or get out, right? I'll say something like that when we're in a trade and I'm like, take it. Like, so that's just like not a point. It's just experience of reading live trading action, like, which is the room, which is if you're in the room with me, and if anyone's here and you're in the room with me, you know, the live, my brain works fast, the market moves quickly, I can see something fast, and I'm talking and trading at the same time, and you got to be there, you got to be in the room to get it. That's the only overlay, which is not a point, but it's just my experience of trading for a long time. Any other questions? Listen, have a great night.
We did have one more from Quackthon, and he wanted to say, what do you think you needed to add to increase your winning rate?
Well, my winning rate year over year for the last umpteen years by the end of the year is between usually 70 and 80%. Someone's asking that. I'm showing the stats right now. I'm at 65. We're only 8.5 months into the year. So if you want to get on my marketing list, you can email me, check back, or go back on YouTube where I have stats from 2024. So my end of the year stats is probably going to be close to 80. But again, I'm still making money. So I'm sort of like, I'd love it if I was at 100%. 90 is ridiculous. 85 is very hard. There are weeks where every trade I do works, but on an average year-over-year basis, I'll hit over 70% by the end of the year. I don't know if I'll hit 80 this year or not. We'll see.
I have a good feeling about it.
I'd love to make as much money as I can in the next 3.5 months, but I'm not gonna go crazy. You know what I mean? Like, yes. So we're in some longs and we're in some shorts going into tomorrow. But I might get out of some of those before Wednesday because I don't know. I'm just telling you, I don't know what Wednesday's outcome is going to be. And I know a lot of people have 100% conviction that they absolutely know what Jerome Powell's going to say. They don't. They don't.
For sure. And he's always he's had a tendency to surprise so far. So we'll see.
That's very, very true. Listen, Jeff, I was thinking about you with Utah over the weekend. So stay safe.